In this section, we are going to explain the importance of regular stock counts or inventory counts and how it should be done, looking at the general controls around stock counts and also the benefits of a regular stock count. First of all, what is a stock count? Stock count is the manual checking and recording of the inventory. May be done at the end of a week or at the end of a period or sometimes daily, depending on the business, where we manually check all the inventory that the business has on hand and we record it. Make sure that you monitor stock that is held in multiple locations. This stock count can help us to understand the controls that an organization has implemented around their stock. We will look at them in the next slide at the types of controls that you need to implement around the stock count itself. But when you do the count, you can also understand the strength of the controls that you have implemented. For example, how safe are you keeping your stock? If you do the stock count and find that stock has gone missing, obviously your control is not working so well, or the stock has been damaged, or the stock has got old, then obviously your stock control is not so great. The stock count is also vital for getting information about the business that we can use for decision making. For example, how much more stock do we need to buy? Do we still have enough to manufacture the products, or how many products can we still manufacture with the stock on hand? So if we get an order tomorrow, will we be able to manufacture? That's why a stock count is very important for business decision making purposes. Now, at the time of the stock count, we need to implement certain controls to make sure that the count is done in an orderly fashion and that it is reliable. First of all, give all the teams that are counting pre-numbered stock sheets. And if there's a number of stock sheets, then maybe it's necessary to keep a register of the stock sheets that have been issued, that have been used, and that have been returned. Also, if you need to mark stock items that have been counted, use tags or stickers or something to mark the items that have been counted, and also keep a register of those tags if necessary, if the stock count is big enough. Count sheets, once we have counted it, we must record it on the count sheets, and those count sheets should be recorded in ink. If you make a mistake, make sure you scratch it out and initial next to each mistake. And team members, the people who counted the stock, must be initialing each count sheet. While the stock is being counted, one person will be the counter, another one will write it down in ink on the stock sheets. Teams normally two, one person who knows the stock and maybe one that knows the accounting side of things. Then those two will count together. As I say, the one will count, the one will write down, use tags to show which items have been counted already, or some sort of indication to show which have been indicated. And in the event of discrepancies between numbers that have been counted, the difference between the number counted and the number on the stock sheets, then it is necessary to recount the items, and that should be normally done by an independent team or maybe by a supervisor supervising it, just to make sure that the second count is actually more correct than the first count. It might even be necessary to count it for a third time until we can get the numbers to agree. During the count, it's also important to make sure that movement is controlled. If there's a lot of movement on the stockroom or the production floor, it can get quite chaotic and we wouldn't know what we have counted and what not. It's very important to implement inventory movement controls to make sure that, first of all, the room and the floor is prepared for it. Stock is very well organized. There should be restricted movement. If possible, at all movement should be stopped, but it's not always possible because business has to carry on. If necessary and if there is movement, then there should be a reconciliation between sales on the day and the closing stock. The stock that has actually been has moved during the day should be deducted from the closing stock in the end. And stock should definitely be well organized, clearly identified, and if necessary separated. For example, if there is stock that is still owned by the company and there's other stock that just needs to be collected but it has been sold already, or maybe consignment stock or demo stock, these stock items should be separated and clearly identified if necessary. Once you've counted, obviously there's going to be the reports from the stock count. there will be a physical inventory summary report, which will have to be prepared, showing the inventory levels, specifically the levels of inventory in each area or subsection. And then there will also be a variance report showing the differences between what was counted and what was theoretically on the system, so that one can see what the differences were, and then obviously they need to be adjusted. Either the system needs to be adjusted or the count needs to be reperformed, but in the end the system needs to ensure that it needs to reflect the correct quantity of stock on hand. Now that we have counted the stock and we've got the reports, what do we do with it? First of all, it can be used, the results can be used for management decision-making purposes. If you look at the stock count and you compare it to last year's or last week's or last month's, then you can see clearly which items move more slowly, items that maybe have expired already, items for which the customer which is no longer a market or whatever. Then you might need to decide what you're going to do with them, sell them at a lower price, stop producing, produce more, produce less, whatever the case may be. The stock count is also helping you with the valuation of your inventory. How do you determine the value of the inventory if you haven't counted it? If you haven't counted it and you need to look at the condition of the stock, then you can get an idea of what the value of that inventory would be. It can help you with budgeting and forecasting. Obviously, if you know that you've got a lot of stock on hand, then you don't need to incur so many more expenses. And then lastly, it will help you with managing your customer relationships, knowing that the customer is going to require the stock. Maybe there's a contract or you're bidding for a contract, then you need to be aware of the levels of stock that are on hand that you can be able to deliver on that contract.